All right, looks like we are live. At the last presidential debate, Joe Biden made some comments about the oil industry and specifically fracking that he's been trying to walk back really for almost a week now, and it may end up costing him the election, as a lot of the oil workers in many states like Pennsylvania, Ohio, Texas, Oklahoma, and even New Mexico, as you will see here later in this article, that the comments are a lot of the oil workers. He's talked about heavily taxing fracking and oil work, and the oil prices are struggling. We're right now at West Texas Intermediate. It's been struggling for a while to stay above 40. There was some false breakouts in the last couple weeks where it was slightly above 40. It was about 43, I think, WTI West Texas Intermediate got to, and it's been struggling because, and I've been talking about this for months now, and oil bulls have been arguing with me on this, even some of my Patreon account contributors, that as oil prices got above 40 to $45, $50 a barrel, you would start to see OPEC, especially organized petroleum exporting countries, the national oil companies, which are not. Oh, looks like someone didn't want us on here for a second. I think, is it back? The stream got shut off temporarily. Says it's back. Probably because of what's in the title. Probably because of what's in the title and YouTube censorship. I mean, my YouTube views counter hasn't grown at all in almost 3 weeks now. It's over 2 weeks. Done a lot of YouTube videos, over 5,000 views on many of the videos, and my YouTube views counter is frozen. And guess what? This stream was just knocked out. You can't make this stuff up. Probably censorship. The YouTube censorship bots probably read what's in the title there with the election coming up and decided to knock things out for a couple of minutes to see if I just quit and give up. But this show is going to be about the oil industry, and if Biden does win the election, it's looking like he is going to be putting punitive taxes on the oil and energy industry. It may cost him the election. Some of the comments he said in the last presidential debate last Thursday about phasing out the oil industry, because there are a lot of oil workers, not oil executives, but oil workers, middle management and oil workers who are reliant on those jobs, who probably might switch from whoever, if they were going to vote for Joe Biden, to Donald Trump. Anyway, there was an interesting comment by an oil industry executive from Double Eagle Energy Holdings CEO Cody Campbell. He was on Martha McCallum on Fox News a few days ago. So I'll play this clip really quick, and then I'll talk more about the oil and energy industry and how political the energy industry is, whether that is coal or natural gas or oil or nuclear. Because nuclear is not the favorite of the Department of Energy or really any politicians at this point, unfortunately. So let's play this clip and then we'll talk about it.
So one of the most talked about moments that we just hit on there for a second from the debate last night was this very interesting exchange about the oil industry. Watch this.
Would he close down the oil industry?
It falls.
Would you close down the oil industry?
By the way, I would transition from the oil industry, yes.
Oh,
I will
that's
transition.
a big statement.
It is a big statement.
That's a
because
big statement.
I would stop.
Why would you do that?
Because the oil industry pollutes. Because it has to be replaced by renewable energy over time.
Basically, what he's saying
question,
is he is
Mr.
going to
President.
destroy the oil industry. Okay. Will you remember that, Texas? Will you remember that, Pennsylvania, Oklahoma?
Vice
You know, you could tell that the president, that sort of lit up in that moment. He knew that that was going to be a problematic issue for some voters out there. Other voters would be happy to hear that in terms of the environment. So here now with reaction, Cody Campbell, co-CEO and founder of Double Eagle Energy Holdings in Fort Worth, Texas. Cody, great to have you here tonight. You know, Joe Biden, the former vice president, was asked this morning to clarify what he said last night. And here's what he said. Watch this.
Eventually, we're going to have to go to all, but we're not going to get rid of fossil fuels. We're going to get rid of the subsidies for fossil fuels, but we're not going to get rid of fossil fuels for a long time.
Yes.
Biden's been talking out of both sides of his mouth, because there's the video where he's telling private donors he's going to ban it. So he's telling different groups what they want to hear. It's just very frustrating because he's telling whichever group whatever they want to hear. And the truth, if he does get elected, is going to be probably, well, someone's getting lied to. Let's just put it that way.
So that was last night, actually, working on the cleanup on that almost immediately before getting on the plane. Cody, what did you think about what he had to say last night?
Well, I was disappointed by it, obviously. He's clearly very disconnected from the real world, but I wasn't surprised by it. What he said last night was consistent with the platform that he's carried from the beginning. He's flipped and flopped a lot, I think, out of an effort to sort of trick some voters in certain states to vote for him. But really, he is after the end of our industry. He wants to put an end to our industry, and what he said last night made that very clear.
What would be the impact, do you think, on jobs in Texas, and will that affect the vote in Texas, which is surprisingly close, according to the polls?
Sure. The impact would be devastating to the state of Texas, but the impact would be felt across the country. We support tens of thousands, hundreds of thousands of jobs in this state, but our industry also supports jobs all across the country: steel workers, auto workers, petrochemical workers. And so the impact, if you put an end to the American oil and gas industry, would be millions of jobs across the country, and it would really hurt the competitiveness of every industry because it would increase all the costs that we bear. So it would be a devastating thing for the American economy if he were to put an end to oil and gas.
Yeah, thank you for putting a voice to your industry. We spoke with a gentleman from the Boilermakers the other night, and you look at all the manufacturing and the industries across this country, and I thought this was an interesting comment on another cable channel referring to people who support President Trump's policies and what makes their mind tick. Just listen to this from John Meacham.
There is a lizard brain in this country. Donald Trump is a product of the white man's, the anguished, nervous white guy's lizard brain. I think Trump did himself good with his base tonight. The question for America is how big that base is.
What would you say to him about that comment and the way that he characterized people across this country?
Well, what I would say is that I wake up every morning thinking about taking care of my family, putting food on the table. I think about taking care of our employees and their families. And if that means that I have a lizard brain, then I guess that you can chalk me up as an iguana because that's what I am. And I think a lot of people in this country feel the same way that I do.
Oh my God, that was a good joke by the oil energy CEO Cody Campbell there, Double Eagle Energy Holdings CEO Cody Campbell. He has an iguana brain. So, oil industry executives actually were anticipating they're hedging their bets in case Biden does win. So this has been going on for the last 8 weeks, where you have oil energy industry CEOs from shale companies scrambling to get federal permits ahead of the election. So from September 8th, there was a Reuters article from Jennifer Hiller that oil producers in the top U.S. shale oil fields are stockpiling drilling permits on federal land ahead of the November U.S. presidential election, concerned that a win by Democratic candidate Joe Biden could lead to a clampdown on oil field activity. Federal permitting in the largest U.S. oil field in the Permian Basin, located in Texas and also New Mexico. So the Permian Basin is so large, it goes across Texas and also New Mexico. And a lot of the federal land, as you can see there on your screen, I took out screenshots from some of these articles. So a federal ban on drilling would hamper oil and gas production across much of New Mexico, North Dakota, and Wyoming, three of the nation's largest oil and gas producing states, as well as offshore in the Gulf of Mexico, which produces 2.3 million barrels of oil and gas per day. So if they did put restrictions on those things, if Biden does win, that's going to start to force the price of oil and natural gas higher. I don't know if that's intentional or unintentional on the Democrats' part, although that would make green energy and renewables and ethanol and other and Solyndra and wind and all these other pet projects that the Obama administration had, and there was a lot of wasted capital because energy is very political. The Department of Energy gave out a lot of bad contracts. Pretty much in every single administration, George W. Bush gave out the corn ethanol subsidies, which were ridiculous. You can ruin your gas tank putting corn ethanol in there with the fuel, and yet they forced that into the gasoline. And then also you have all the bad deals the energy deals of the Obama administration with the Solyndras, the Fiskars, all those, just a long line of bad alternative energy deals, which did not produce a return on investment for taxpayer dollars, which were just basically bribes and unbidded contracts. And hearing from former Department of Energy employees that I've spoken with off the record that quit in frustration, that wanted to allocate capital that would actually help long term, there was none of that. Very little to none of that. And if there was rational, there would be investments in good nuclear power, and especially the liquid fluoride molten salt thorium reactor, which I've talked about many, many times over the years, which the U.S. Department of Energy, big nuclear, and the military industrial complex is blocking. But there is really good nuclear technologies that have a lot of promise, that deserve research and development dollars, that deserve pilot plants, that deserve testing, and can't get any type of approval. You're looking at 10, 20, 30 years and tens of millions, maybe hundreds of millions of dollars in regulatory, and no private company is going to waste that type of capital jumping through that many hoops, rules, regulations, and taxes just to get a pilot plant done. And that is how bad things are with all the different energy industries picking up. So there really isn't, and also if there was a higher taxes or forced costs or a fracking ban or restriction, this would actually benefit natural gas, because there is a ton of natural gas byproduct in these shale oil wells that is flared off. There is not storage facilities for this natural gas right now here in the US, but we've seen a big rally in the natural gas prices. They collapsed when a lot of orders in China were canceled on force majeure in February and March. That was in contracts. There was a lot of LNG contracts that were supposed to be LNG that was supposed to be exported to Europe and China. A lot of it was rerouted when the Chinese canceled it, was rerouted to Europe. But natural gas demand has the brightest future as of now for any of the energies. So it's likely. And one of the things I have on there on the screen is jet fuel. There is not a good substitute for liquid jet fuel. Oh, is the stream getting shut down again? Oh man, that would be hilarious if the stream gets shut down again. Okay, the stream didn't get shut down again. It's still going, barely. I don't know what happened in the first couple minutes. Probably the YouTube censorship bots. Farham says here he needs sleep. If you have the nightmare health problems that I do, you're lucky if you get 20 or 30 minutes of good clarity focus. And unfortunately, that normally happens to me in late evenings. That's the life I have right now, where every day is a nightmare just to get anything done. 20 or 30 minutes of good focus, maybe an hour. So, and I've still been getting work done. So if you don't like it, I'm sorry. That's my reality. That's my nightmare. And I'm on $1,000 a month of supplements and nootropics just to be able to get 20 or 30 minutes of energy and focus done for a live stream show. I think most of you don't understand the amount of focus, energy, and concentration for some of these live stream shows. Some of the questions in the super chats are very, very hard. There's hedge fund managers that can't answer some of these super chat questions, even with a couple weeks or a couple months of looking things up. Okay, so back to this article here from September 8th. So yes, every day is a struggle for me. I would love to be a normal adult and work normal hours. That's not the life I have. It sucks, but that it is what it is. I know most of you don't want to hear about my health problems. I do the best I can with the shitty hand I've been dealt. Federal permitting in the largest U.S. oil field in the Permian Basin, located in Texas and New Mexico, is up 80% in about the last 3 months, which analysts attribute to a hedge against a win by Joe Biden, who currently leads U.S. President Donald Trump by several points in the bullshit polling that the mainstream media has and New York Times and all that. The other polling is actually far closer. It's within the margin of error. It's going to be a very, very close election. Biden has stated that he does not want to ban fracking outright, putting him at odds with many environmentalists and Democratic Party activists, but he's also told different groups different things. That's the problem. And Biden is such a liar and so corrupt. I mean, it's coming out, the stuff. Did you see the report that Balding's World put out over the weekend, that it's actually not 1.5 billion. It's actually closer to 7 billion that the Hunter Biden and Joe Biden were collecting fees on. So Joe Biden may have made over $100 million from the Chinese Communist Party, and Hunter Biden may have made over $50 million. And you know what? That's just one of their deals. There's a lot more where that came from, supposedly on the hard drive, from what I've heard. Biden has stated that he does not... however, his climate plan includes banning new oil and gas permits on public lands, which industry groups say would hurt the economy and cut off an energy boom that has made the United States the world's largest crude oil producer. But that shale oil boom has been subsidized by the suckers, the pension funds, and also the Federal Reserve and Wall Street. They sold a ton of junk bonds, a ton of debt, a ton of shares to unknowing investors who, let's say, didn't do proper due diligence on a lot of these deals. And now you're seeing the higher cost shale producers with way too much debt. You've seen bankruptcies, a smaller amount, not wide scale yet, but we'll see. You've seen a lot of the deep water offshore oil companies go bankrupt. But the shale oil companies, a lot of them have actually managed to survive. You've seen some of the higher cost ones like Whiting Petroleum go bankrupt and a few others, but nowhere near the amount that people predicted. But that's because over the years, for the last 10 years, the shale oil companies have been able to raise many trillions in junk bonds and revolving credit facilities, corporate bonds, and debt. The shale revolution of recent years boosted U.S. crude oil output to roughly 12 million barrels per day, subsidized again by the U.S. Federal Reserve because a lot of it was uneconomic. It did not generate free cash flow. It barely could even service the interest payments on the debt. That is how uneconomic a lot of this shale oil was, and those wells were the sweet spots. But it seems that that's part of U.S. energy policy to get U.S. oil energy independence and also help the petrodollar, help the U.S. maintain the petrodollar with the oil production that it had. My friend Louis Camersano at Small Gold has been talking about that for years. So shout out to Louis. I know he still listens to the podcast. So the shale oil boom, the credit boom, was subsidized as policy by dumb pension fund investors and also Wall Street and the Federal Reserve. So the U.S. would have a oil production boom. It would help with the U.S.'s trade deficits. So the U.S. has to run trade deficits because of Triffin's dilemma. But if the U.S. didn't have all the oil products, all the oil production, it would have been even worse over the last 10 years. Okay, shale revolution in recent years boosted U.S. crude oil output to roughly 12 million barrels per day last year through hydraulic fracturing or fracking, which is environmentally controversial as it involves pumping water, sand, and chemicals into rock at high pressure to release oil and natural gas. Also, it destroys all the infrastructure on the roads. My friend Dr. Chris Martinson has talked about this at length, that in North Dakota, and I have friends who were up there in the Bakken, they weren't working on the oil rigs. They were working in the boom towns. So they were working at restaurants and working at retail and getting paid a high salary to work in these in the Bakken up there in these towns. And it was just a mess how bad the roads were. The roads were destroyed and the oil companies were not paying for any of this mess. So there was many, many billions of dollars in damage to infrastructure from the oil companies that they did not have to pay for while they were doing the fracking as well. And then also the water cleanup, is very, very expensive to get the water cleaned back up. From what I've from speaking with water treatment facility companies, is super expensive to reclean the water after it's been used for fracking, and a lot of water is used. As of August 24th, producers have received 974 permits so far this year for new wells on federal land in the Permian, compared with 1,068 for all of last year and 265 in 2018, according to data from Enverus. So they're stockpiling permits because they're worried that Joe Biden, if he does win the election, will not allow the permits. And if you already have the permits ahead, they can't cancel those permits, or at least as of now, they can't cancel the permits. That hasn't been past policy. So maybe they will change things because governments are good at changing the rules. But as of now, they wouldn't cancel the permits. So you're having a stockpiling of permits, but either with the policies that Joe Biden puts in place, if he does win, I think that would probably force oil and natural gas prices higher. And natural gas would probably be one of the main beneficiaries because of how much natural gas in shale oil wells is flared off. So if there's less oil production, there's less shale gas as a byproduct that's flared off. So that would be less supply of natural gas, and that would put a higher price floor in for natural gas. So there would be less likelihood then of natural gas prices crashing because the odds of an oversupply of natural gas would be reduced because there wouldn't be as much natural gas byproduct. So this, for long-term natural gas bulls, there's also a lot of utilities that have been voluntarily switching away from coal and moving to natural gas for electricity generation. And that's one of the major issues with electric vehicles is there needs to be trillions of dollars. And Joe Biden has kind of talked about this, saying that it would be good for the economy if we invested trillions of dollars. Yeah, central planning, unbidded contracts in supercharging stations. I mean, Elon Musk at Tesla has been promising how many supercharging stations all over the U.S. for how long? And he's nowhere near that level, and that's a private sector. But Joe Biden is talking about putting a massive amount, many, many trillions of dollars worth of electrical charging stations. But the problem is the electrical grid. So you can put supercharging stations in, but the way the old U.S. electrical grid is, and it's being held together with bubble gum and duct tape, it is a mess. The current U.S. electrical grid, it cannot withstand every single adult plugging in electric vehicles. And that's going to use a massive amount of fossil fuels at the power plants to generate electricity unless we switch to nuclear power. And that doesn't seem, with how bad things are going with getting a nuclear power plant approved, it is like doing a root canal to get one nuclear power plant approved. We are really far off in all those goals. So you're looking at many, many years, probably decades. They've been saying since I was a little kid, and I'm almost 40 years old now, that they were going to invest in the electrical grid, that the electrical grid was going to be upgraded and improved. They haven't done it. I mean, there's been slight improvements here and there, but the majority of the electrical grid in the United States is held together by bubblegum and duct tape. And a lot of the security systems and computer systems, there's been reports on this for decades now about the lack of security for the electrical grid here in the United States. It is a joke, the security systems. They got a D or an F on security, how easily they could be hacked. I think there's even been rumors, there's been blackouts and brownouts in large amounts of the U.S. for the last 10 or 15 years. There were rumors that like the Chinese hackers, Chinese military hackers did it as a test. I mean, those rumors have been going around a while. So the electrical grid is a disaster in terms of being able to efficiently generate electricity, move it across the country, move it to areas we need. We're seeing blackouts. We're seeing intentional brownouts in California now. What a mess, California. What a mess with the electrical grid. So you have no real substitute for petroleum products like jet fuel. You could switch to natural gas-made plastics. A lot of petroleum product companies are switching. So you've seen like motor oil companies switch over to natural gas motor oil, but there really is no substitute for oil-made jet fuel. I haven't seen it. So I haven't seen a good electric plane. If people do start flying again, it anywhere near pre-pandemic normal levels a couple years from now, can't phase out oil entirely. And the amount of investment dollars to upgrade the electrical grid and install an insane amount of electric vehicle charging stations so every American adult can switch over to electric vehicles is going to be nuts. I've seen some small low-level estimates for like 4 or 5 trillion for Green New Deal and other energy investments. That is way too low. I mean, we're talking tens of trillions, and that number might even be low. So there's been high-end estimates for Green New Deal, way over 50 trillion, maybe even 100 trillion. I mean, at this point, the deflationists and the MMT people say that's a good idea. It'll fight deflation. That's how ridiculous. I saw like someone put out a tweet saying like Dr. Lacey Hunt and Stephanie Kelton, the MMT queen, should debate. And I was like, they're going to both agree that the Fed should print trillions of dollars to fight deflation because they both hate deflation. Okay, let me get back to this article. Crude oil prices. The scramble for permits comes despite the weak outlook for oil drilling and prices due to the ongoing pandemic. The main problem, again, is demand for the oil market. So for jet fuel demand, we haven't seen jet fuel demand come back. There's not a ton of new cars being sold. People are driving less. They're not doing the insane commutes that we had to before the pandemic. There's a lot of people still working from home, or their companies are opening locations in the suburbs. Crude oil prices plunged in, so unless demand comes back, the oil market's going to be pretty much capped. Okay, because as soon as oil prices go up another $5, $10, you're going to see OPEC countries cheat. They're going to ignore their production quotas. There's a long history of OPEC countries, national oil companies cheating on production quotas, especially when oil prices are low. And then shale oil producers, the more efficient ones, every $5 or $10 that oil prices go up, they can bring on more production. They can start bringing on production that's more marginal, and that can make them a little bit more positive cash flow. Crude prices plunged, so I'm in zero rush to add a lot of oil stocks. There's people out there messaging me, why aren't you a full-time oil analyst, Jason? Why aren't you doing weekly coverage? Why aren't you doing valuations on all these oil stocks? And the answer is I'm in no hurry whatsoever to add a lot of oil stocks. In fact, if natural gas prices crashed, I'd probably be looking at going long natural gas related investments at this point, because the winter is coming up and natural gas normally benefits from that. Although oil, the summer driving season for seasonality for oil usage, there wasn't really a summer driving season, and heating oil demand does increase a little bit, but it doesn't offset the seasonality for the summer driving season. So in terms of seasonality, we're entering the period now where oil demand is actually very weak historically, even when demand was higher at pre-pandemic levels. So natural gas, we're entering the seasonality point where natural gas demand is actually going to be very high, especially out of Europe for colder winters. Number of oil and gas rigs drilling new wells in the United States hit record lows for 15 weeks, and last week was 71% lower year-on-year, according to Baker Hughes data, and analysts do not expect a sharp rebound for some time. Uncertainty about a ban and other possible regulatory changes, including a proposal to modify royalties to account for climate costs, mean more permits will be filed ahead of the election, said Bernadette Johnson, vice president at Enverus. The industry has raced to file for permits ahead of potential regulatory changes in Colorado in 2018, as voters considered a proposition to increase the distance required between new wells and buildings. Permitting jumped 165% in the last 6 months of the year compared with the first half, according to Enverus. At least 9 producers stockpiled more than 2 years worth of permits. EOG Resources Inc., Cimarex Energy, Matador Resources, and Devon Energy are among the shale producers who have said they expect to have years of drilling permits. Okay, so they preemptively stockpiled in case. It's a smart hedge by the management teams. Devon is, quote, proactively managing risk by stockpiling more than 550 federal permits in New Mexico and Wyoming. And that's the key there, as you can see there on your screen in the bottom red box. Although Texas does not have a lot of federal land use for oil and gas drilling, many energy companies across the state are working on drilling projects on the New Mexico side of the Permian Basin. The Permian Basin is the best oil field now in the United States. So it is the sweet spot, the main growth engine for oil production growth now in the U.S. over the last 5 or 6 years is the Permian. There is still some growth, although the growth rate is slowing, especially because the oil price is falling. However, even if the oil prices went higher, I think because oil companies have to be more focused on free cash flow, there is not the capital available in terms of junk bonds, investment-grade corporate debt, amount of debt they can borrow in revolving credit facilities. That debt available now is very, very limited. So is selling a lot of shares. So the resources available for these oil drilling companies to grow quickly, to grow their oil production quickly and natural gas production quickly, and do it inefficiently without free cash flow, without profits, without paying their shareholders dividends, that capital is gone. So the growth rate now of shale oil wells, even in the Permian, which is the best spot, the growth rate is going to slow a lot. And that's even if we have oil prices back at 60, 65, 70, 75. You will see a bump then in oil production, but it will not be the fast growth rates then that we had over the last 10 years. When capital was just unavailable. When capital was easily available, and now compared to the last 10 years, the amount of capital available to the oil industry is very, very limited. And investors, even investment bankers, even those assholes on Wall Street, even those investment bankers on Wall Street are telling the oil company CEOs the capital's not available. That they have to be more efficient. They have to focus on dividends. They have to focus on free cash flow. And honestly, as a value investor, someone who looks at the operations of a business to see how well the business is doing, that's what they should have been doing in the first place. But in this new normal now for the last 10, 15, 20 years, where insane amounts of currency and credit are available with the Cantillon effect and it's sloshing around, and as policy with whatever subsidized, whether it's corrupt green energy scams or corn ethanol or subsidizing the shale oil boom, people did not focus on free cash flow. People did not focus on running their business efficiently. One of the worst examples of that was Aubrey McClendon. Just enormous amounts of waste at that company. At Chesapeake Energy. Okay, Devon is proactively managing risk, stockpiling more than 550 permits in New Mexico and Wyoming. Chief Executive Officer David Hagan told analysts this month, Devon Energy just merged, and now they have 50% oil and 50% natural gas. Maybe in the next couple weeks, I'll write an article about them and the natural gas market. I have part of an article done in the saved in the draft section on the natural gas market, the long-term prospects of it for patrons. Okay, most producers have a runway of 12 to 18 months in permits in the Permian and Wyoming's Powder River Basin, said Jake Roberts at an energy investment bank, Tudor, Pickering, Holt & Company. Federal permits are for 2 years and can be extended another 2, but there is no guarantee that routine permit extensions would continue in the future, Cimarex CEO Tom Jordan said on an earnings call in August. And again, this is about jobs. So the oil workers who are voting, and one of my listeners brought up an interesting question a couple days ago in the Wall Street from Main Street Facebook group. How are the oil worker unions, how are the oil workers going to vote in Ohio, in Pennsylvania for shale oil and shale gas, Texas, Oklahoma, Wyoming, North Dakota, and New Mexico? They're going to vote to try to protect their jobs? So we'll see. U.S. oil production remains below 2019's peak, and analysts expect it will be slow to recover in the coming year. Again, this is supply-demand, the remnants of free market supply and demand, because we have weak oil prices, so companies are not going to go out of their way to increase oil production. Now, the OPEC countries and the national oil companies in OPEC, that is different, because historically, when oil prices are low, the countries in OPEC, the national oil companies, they've normally increased oil production, and they try to make it up on volume. Now, a private sector oil company would not do this, but national oil companies in OPEC are different, and they don't run efficiently compared to private sector oil companies. In the coming year, as shale production depends on new investment due to the short life of the wells drilled. Land of enchantment, the race for permits has centered on the part of the Permian Basin located in New Mexico, said Artem Abramoff, head of shale research at Rystad Energy. About 85% of oil permits that have been on federal lands this year, up from 60% in 2018 and 2019. Evidence that companies trying to fast-track permits on federal acreage, Abramoff said. Meanwhile, permits on state and private lands, which feature similar geology, have fallen. New Mexico governor, so people are just stockpiling in the sweet spots there on federal government lands. New Mexico Governor Michelle Lujan Grisham, a Democrat, has said she would ask for a waiver exempting it from any drilling bans. The state is one of the nation's poorest, and a third of the state's budget comes from oil and gas revenues. And this is why they want it to maintain. This is the same reason why all these governments want nominal real estate prices higher. It's all about property taxes. For some of these, for those of you who are not American, even there's Americans who don't know about this, but there's a lot of municipalities, and 60% or more of the local government budget revenues, the tax revenues, are based on property taxes. So if real estate prices crash and they stay low, that means the government budgets collapse too. Because if real estate prices stay low, can you justify then increasing property taxes? So that's why the scam, and George Gammon and myself have been talking about this for a while now. That's why the scam is the Federal Reserve's involved. They try to force real estate prices higher nominal value. and it helps keep the finances for these municipalities, local governments, because they're so reliant on property taxes. It's so much of their annual budgets for tax revenues. And if real estate prices collapse and stay low, then these local governments are even more insolvent. They're in even worse problems. And we're seeing during the pandemic, and I've covered this in the last week, some of these local governments are still trying to raise property taxes. And I'm sure more will too. Okay, Matador and EOG Resources have been two of the most aggressive in adding federal permits in New Mexico. Matador expects to have 300 federal permits by late 2020. Quote, we think the chances of them saying you can't drill on your leasehold are fairly slim, CEO Joseph Foran told analysts in July. It's new federal permits in two key New Mexico counties that are among the most prolific in the Permian Basin are up 149% so far this year compared with its 2019 total. According to Rystad, EOG's permits in those same New Mexico counties, Eddy and Leah, are up 49% so far this year compared with all of 2019, according to Rystad. EOG has 2,500 permits on federal lands in 4 states, approved or in the works, enough for 4 years, Chief Operating Officer Lloyd Helms said on an earnings call. The industry has secured so many permits that investors and analysts have largely shrugged off the political risk of a federal fracking ban. Quote, I'm not sure it would have the big impact that people are making out to be. Probably the stocks on the election, the shares themselves would probably crash, and that might be a buying opportunity. But it seems the management teams have done a good job, or the best they can, hedging things with getting the permits. But the shares themselves, depending upon the election, could crash. So that is a warning to people who overloaded on too many oil shares. And I think natural gas shares are probably safer at this point. Actually, like I said, if fracking was banned, if shale oil fracking was banned here in the U.S., or at least taxed more heavily by Biden, they came up with some type of new tax scheme, then I could see that really benefiting natural gas prices. And natural gas prices have had a nice little rally. So I'm not in a hurry to go out and buy a lot of oil stocks right now. If there is a crash in some of the oil stocks, the really quality ones like your Chevrons or Royal Dutch Shells or EOG Resources, some of those, if there was a crash in some of those shares, I would be interested. But I'm looking at quality at this point, and I'm in no hurry to look at energy, because normally what drives an energy bull market is demand for energy more than supply. It is demand. And that's why you had like the oil market for many, many years, you had constant demand increases for many, many years. And that helped drive oil bull markets in the past. Natural gas has a clear tailwind, because a lot of electrical generating power plants are switching over voluntarily to natural gas from coal. So I think long-term natural gas has a bright future in terms of demand. There's going to be a lot of demand increases out of China, Asia, Japan for natural gas, and also out of Europe. Okay, let me take a look at the super chats. We have some really nice super chats here. Got a $4.99 super chat from G6. Thank you for the super chats, much appreciated. Stoic has some funny cuss words here for Joe Biden. I don't like him very much either. He is a DC swamp creature for almost 50 years, and he is worth way over $100 million. So for him claiming he is poor or working class, he has not been poor or working class in probably over 40 years. That dude is so rich and so corrupt. Like pretty much all the other swamp creatures, Republican and Democrat, here in the DC metro area. Okay, we have a super chat from Gio, $49.99, $50. Thank you very much for the super chat. I appreciate it. He says, green energy is a scam. The only good thing about solar panels is being off the grid. They are not economic at all. The Tesla roof is interesting, but if your house is spray foam, your power bill will be low. Tesla Charts has proved that the Tesla roof, the panels are fake. He's actually was a solar industry executive. What's funny, Gio, is that the solar company ETFs, exchange traded funds, are actually rising with Biden in the polls over the last like 6 or 7 months. But I guess they're betting on more waste, fraud, corruption, and abuse out of the Department of Energy. More unbidded contracts, more insider deals, more cronyism to pet projects, with deals negotiated when people leave the public sector. So those stocks, those solar energy stocks, wind stocks, if Biden wins, they're going to go up. They're not efficient at all. And many of the solar companies, many of the solar or wind companies might make money, but they won't make money without subsidies. And normally in the past, they needed much higher oil prices, even with subsidies, even with insane amounts of subsidies. The biofuels companies, solar, wind, they all needed higher energy prices and subsidies to make any profits. And still, as soon as the oil prices crashed, they lost insane amounts of money. There are way better alternative energy technologies than a lot of this stuff being proposed, but here in the United States, the Department of Energy blocks most of them, and the Patent Office blocks most of them. There's a documentary called Gas Hole. You can watch it, but my favorite alternative energy project technology, my favorite nuclear power technology is a liquid fluoride molten salt thorium reactor. It should get many, many millions of dollars in research and development. It should get pilot plants. Why? Because it can recycle old nuclear weapons. It can recycle old nuclear fuel rods. It deserves serious investment. And the Department of Energy is, of course, blocking it. There's zero chance of it getting approved here in the United States, from a conversation I had with a nuclear power executive. Wow, I didn't know I was doing this for 40 minutes. Okay, so there will be more links about this if you want to take a look, but we could see a big crash depending upon how the election plays out. But Biden has made a bunch of contradictory statements about oil, about banning fracking or taxing it or subsidizing, taking away any subsidies from oil and gas and moving them to green power. All these things, the bottom line is all these things could force costs higher for the oil industry, and capital for a lot of the oil companies is nowhere near available. Now, you've seen ExxonMobil borrow an insane amount of debt, and their balance sheet is a mess now. They've been doing they did Jack Welch financial engineering under Rex Tillerson for a very, very long time. I am not a fan of ExxonMobil. However, if the oil and gas price goes high enough, ExxonMobil can save itself. But I think they're in big, bad shape if oil prices don't go back to $60, $65 a barrel. They have a lot of interest payments on debt, a lot of debt that they've taken on in the last 7 or 8 months. And they had a pretty bad balance sheet before that with financial engineering, but they took on an insane amount of debt in the last 7 or 8 months. They don't have to pay interest payments on it yet, but the next 2 or 3 years are going to be dicey. They're gambling. ExxonMobil is gambling that the oil price will be back at $60, $65 a barrel in the next year or two. If it's not, they're in trouble. So I would stay. I know I've gotten emails from people that they bought ExxonMobil stock. I would stay away from it. That's my main takeaway here. There are larger oil and natural gas companies that have way cleaner balance sheets. Your Royal Dutch Shells, your Chevrons, way safer than ExxonMobil. And then you don't have the Jack Welch, General Electric, financial engineering disasters on the balance sheets of all these oil and gas companies compared to ExxonMobil. ExxonMobil, Rex Tillerson did. He was being praised, Rex Tillerson, as a great CEO for a long time. When you look at all the share buybacks that ExxonMobil under Rex Tillerson did with debt and free cash flow at $90 a share, $80 a share, $100 a share, in that price range from like 80 to 110 when oil prices were screaming, and with debt, it is a mess. They wasted a lot of that. They should have been, when oil prices were low and natural gas prices were low, they should have been buying up more reserves for cheap. Mining companies and oil and natural gas companies, which are capital-intensive businesses, should not be doing a lot of financial engineering with the balance sheet. They should be focusing on buying quality natural gas reserves and oil reserves for cheap when prices are cheap. Unfortunately, Most mining companies don't do that. And most oil and gas companies don't do that. Guess who does that, though? The precious metals, royalty, and streaming companies. They can be contrarian. When a certain metals prices crashes, they're the ones doing the deals. And that's why long term, they've outperformed. Because they're the contrarians. They can invest capital efficiently and smartly in a counter-cyclical way as a contrarian. And that, over the long term, is how you make a lot of money in the resource industry. And that's why Franco-Nevada, Royal Gold, Wheaton Precious Metals, and now Sandstorm Gold, that's why they're in such good shape. That's why the operational businesses have strong balance sheets, lots of diversified cash flow, because the management teams made smart deals over the long term. Okay, I got a couple more super chats here, and then we'll wrap this one up. Got a super chat from Dude Seriously. I like your screen name. Thank you for the $3 super chat. I appreciate it. Yeah, I would prefer not to do shows this late. It's almost 1 a.m. Thank you for the $5 CC Danielson. I appreciate it for the $5 super chat. And that's it for right now. And take a look at my Patreon. There is a lot of content, almost 120. There might be over 120 pieces of unique content behind there on gold and silver, precious metals. The precious metal markets were smashed. You know, it's really funny. The dollar gets weak and the Fed's going to expand its balance. The Fed's balance sheet's going to 8 trillion soon. Okay, the Fed's balance sheet's definitely going to 8 trillion soon. Very, very soon. And the paper's precious metal markets were, of course, smashed. Normal stuff. Oh, but the JP Morgan paid almost $1 billion fine. Spoofing. So that means they stopped, right? No, that means they paid their toll and they can still do it. And the regulators don't give a shit and aren't going to stop them or fine them anymore. This is the new normal, but gold and silver will go higher, and there may be good buying opportunities in the not-too-distant future on some of the gold stocks. Hopefully, I will feel good enough to write an article for patrons on why the Fed's balance sheet is going way above $10 trillion in the next couple years, and it's going to get very, very ugly with the Fed's balance sheet. And the deflationists are still going to say there is no proof of inflation. RR says 8 trillion is that all? It's going to go to 8 trillion and then 9 trillion and then 10 trillion and then 11 trillion and then 12 trillion. It's going to go very, very quickly to 10 trillion. And then it's going to go even faster to 15 trillion. Let's just put it that way. There was $2 trillion in corporate bonds, junk bonds, leveraged loans, collateralized loan obligations, other corporate garbage debt, other toxic sausage sold by Wall Street. And all the parasites, all the cantillon effectors, all the hedge fund managers and family office assholes, and all those guys who are making extra money off of this stuff, buying the bonds cheap and flipping them to the Fed or leveraging up the trades in February, March, April, and May, and then flipping them for profits, they're all out. They made their profits. Now it's time. Now, before these things collapse again. And why are they selling more debt when the companies don't have the cash flow to service the debt before the pandemic? Another $2 trillion. Another $2 trillion added to the corporate debt bond bubble. And they couldn't pay off the existing corporate debt bond bubble before the pandemic. And that was with a lot more cash flow. I'll save that rant for another show.